Well, good morning, everyone. Good morning. It is June 8th, 2026, Monday, June 8th, 2026. So good to see you all this beautiful and awesome Monday morning. Hope you all had a excellent weekend. Lots going on here in Austin. Excited to go over the market conditions that we are experiencing. We had a great meeting on Friday where we went over the upcoming contract changes. Effective July 1st, we are still waiting for the Texas Association of Realtors to publish the updated forms. As soon as they are published, you will be the first to know. But it is effective July 1st, so keep that in mind. I will, of course, let you know the second that it is published, and that's going to include the contract, the listing agreement, lots of changes going on. And then we also went over the update to Transaction Desk. It's called Transact. And I'm begging and pleading for you not to update that. It is impossible to deal with. So please continue to use the legacy system. When you log in into Transaction Desk, it's going to have a top banner saying try the next evolution of Transaction Desk. Create transactions with Lone Wolf Transact. Get started. Do not get started. I beg you, do not get started. There is a way to revert back to the old one, but even if you click on reverting back to the old legacy Transaction Desk, it still tries to default to your dashboard. We already had someone today say, hey, I'm getting this error message. I can't log in. I can't access my transaction. It says that the dashboard is not working. And I said, well, this is, I've said it twice. Don't update it. Do not update it. So I'm begging you, do not update it. It's impossible to deal with. So do not forget not to update Transaction Desk. Well, we are going to get started by looking at the new listing to pending ratio. This is the single best leading market indicator available for the entire market. Let me go ahead and explain to you what these numbers mean, because we do have every now and then some new people joining the call. We also do publish this for the entire public. So we have new viewers that might be watching this for the first time. Every day we update this, but every Monday morning we just do this video where we take a look at the new listings, price increase, price decrease, the percentage out of everything that could have gone up or down, that price distribution, what percentage went down in price, back on the market, and then what percentage of new, but not the same properties, right? So it could be property that was under contract for 3 months, but it's good to look at the percentage. So in relation to the new listings, what percentage back on the market represents that? Then we've got active, under contract, and then pending. On the multiple listing service, you've got 2 categories dealing with properties that are under contract, properties that were absorbed by buyers. Active under contract means that it's still being presented on all portals and it's under contract, but that seller is willing to accept a backup offer. That's why it's active under contract. It's being publicly marketed and the seller's willing to accept a backup offer. Pending means it's under contract and it's no longer being advertised to the general public. The seller is not wanting or willing to accept a backup offer. And then we look at the total, and then this ratio is simply where we are dividing the new plus back on the market by what was absorbed by the market. So if you have a ratio of 1, then that is considered what we call that perfect market equilibrium, where 1,000 properties came into the market, 1,000 properties were absorbed by the market. Inventory over time neither goes up nor goes down, stays pretty steady. When you have a ratio under 1, and let's just take a look at 2 weeks ago before we update the pending, the ratio was 0.72, which means that out of 1,000 properties, 720 were absorbed under contract, absorbed by the buyer pool out of 1,000 properties. So you have what? You have a leftover amount of 280 properties. And then we've got the difference. In this case, the difference is 426 because 2 weeks ago we had 1,279 plus 233 divided by 1,086. So that's going to give us a ratio of under 1, which means that inventory slowly creeps up because less properties are being absorbed by the market that are coming into the market. And this little red dot means that it's underperforming the same ratio, the same week last year. So we take a look at that specific week and we compare this specific week this year compared to that same exact week last year. So it's going to be your year-over-year comparison. And you can see that we've been on a roll. We've had 14 weeks in a row where this year outperformed last year, going all the way back to February 16th. And it changed a little bit because now the ratio is 0.72. This same week last year, the ratio was 0.81. So what we want to do right now is we want to take a look at the pending, and we're going to go from May 25th to June 1st. And this number is going to go from 436 to 444. And the reason why this number went up, even though it was 2 weeks ago, is because agents are really bad when it comes to updating the status on the MLS. This goes up to 651. And now let's take a look at the past few weeks to make sure that all the information is up to date. This goes up to 503. This goes up to 560. And then from the 4th to the 11th, this is going to go 561. Let me take a look at a few more weeks to make sure we don't have to update anything else. And we've got 611. We've got 656. We've got 613. So we're going to go. Everything is now fully updated. We can now start updating from the 1st to the 8th. The reason why I update this every single morning is because you look at this date from June 1st through June 8th. Well, right now it's 10:12 a.m., meaning new listings in price increase, price drop back on the market, they're going to keep on happening today. So when I update this information tomorrow morning, new price increase, price drop back on the market will lock in. And active under contract, it'll keep on going up because agents are allowed to go backwards in time a little bit and say, oh, actually, you know what? I forgot to update this listing. This listing actually went under contract 3 days ago, sometimes a week ago, unfortunately, sometimes a month ago. And that's why we always go backwards in time and we update the active under contract and the pending. Now, on the number of new listings entering the market. Whoa, okay, interesting. Wow. 1361. Well, there's a little bit of a bounce right there. Last week, 1279. The week before that, 1191. Y'all, 1361. There's that bounce right there. We had a pause on the number of new listings entering the market. May 18th through the 25th, picked up a little bit, May 25th through June 1st. And all of a sudden, we just see this interesting uptick. It's going to be really interesting. The next window that I click on where we compare the year over year, same week. Let's take a look at price increase. What's going on with this? Okay, this number plummets. Now let's take a look at price decrease. Not bad. 1890, 92% though. So we just broke a 4-week trend. So we've got a 4-week high on the percentage that went down in price. Let's take a look at back on the market. We're at 223 back on the market, 16% active under contract, 418. And now this is where you get to guess. I need 5 guesses. 5 brave souls to guess how many properties went pending. Keep in mind, this information tends to be a little bit on the low side of things when we're updating it first thing in the morning. And then, as you know, over the next few weeks, it'll go up. Melanie is going to start us off at 239, followed by Charmaine at 223. Sonia consistently at 222. Ryan coming in at 203. Violet coming in at 212. Let me click on it. Oh, well, it's lower than everyone's guess. Oh, wow, you all. 201. Yo, what's going on? Yikes. 201. We are having a pretty significant bump on the number. Well, let's take a look at the same week year over year. Interesting. Take a look at this. We are shy only 14 new listings entering the market. It is 10:15 right now. Do you think that for the next 13 hours and 45 minutes, we are going to get 14 extra properties on the market? Yeah, you better believe it. More like 75 to 100. We're going to have about another 100 properties entering the market. So last week, we were up 78, 2 weeks ago, 6.5%. We're down only 1% right now, down only 14. Are we witnessing a market reversal right now? We had a significant run over the past 14 weeks. It ended 2 weeks ago. We averaged an increase of 11.9% in activity. This is going to be the average going back those 14 weeks. And then we went negative 11.1%. Now, this number is going to improve, but we need 59 additional properties to go under contract. These are the lagging properties going under contract. They're probably under contract right now. The agents did not update. If we don't get 59, that means that we are not going to be 2 weeks ago. So it's going to be the first time in 14 weeks where the activity slows down same week compared to last year. And then all of a sudden, we just notice an uptick on the number of new listings, a huge uptick on the number of price drops. Number of price drops, I mean, we're still down compared to last year, but we're noticing an uptick. So we're talking about reversal here. Interesting. Do you think we will get another 59 or less? New listings? Or what? Pending 2 weeks ago? Man, that's a good question, Melanie. We will. It's going to be positive single digits. It's going to be positive single digits, I would say, like positive less than 10. Based on what I'm seeing with how long it's taking for people to update the pendings, we will. Why doesn't the board enforce the pending updates? That is a very good question, Violet. They used to enforce that. As a matter of fact, they used to issue $100 fines whenever someone did not update. And roughly 10-ish years ago or so, 2014 to 2016, 10, 12 years ago, they said that they would rather focus on the education side instead of the enforcement side, that they don't want to be in the business of charging agents fines and fees and all that. They'd rather focus on education and compliance versus enforcement. Well, there you go. That's why. I would rather they focus on enforcement because it's the same people over and over and over again. So clearly the education is not working. Now, what I think they ought to do is just do like a freebie. Okay, twice. You do this twice, not a big deal. I've forgotten to update a property and they're like, hey, by the way, we just got a call. Your property shows active. Like, oh my goodness, you know what? I'm so sorry. I forgot. And they're like, back in the day, they're like, hey, by the way, you do this again, it's going to be a fine. Do you think I forgot it? No, I never forgot it again. And then you've got the same people over and over and over that where education is not working for those people. Now it comes time to just lay down the law, charge $300. Guarantee you at that point, they will start updating the information. But they're focused on education and not on enforcement. Or they've redefined enforcement as, hey, by the way, hey, by the way, hey, by the way. That's what's happening. So we are down 44.3% year over year. Y'all, when was the last time we saw a 0.39 when we did our Mondays? It was a very long time ago. Can y'all remember last time we saw a 0.39? I want to say we have to go all the way back to 2023, 2024, 25. Melanie said probably last year. You're probably right about that. I mean, that's a low number. That's a very, very low number. So we had a 0.77. This was back in October. We had a point, it was probably back here, 2025, when we got down to the 0.68 or so. So when this is all said and done, we're probably looking at a 0.65 end. Well, let's take a look at the monthly. Maybe the monthly is going to give us better data, even though it's, it's the same exact timeline, so it really doesn't matter. Yeah, it's the same timeline. Well, no, it's a little bit of a different timeline because the weekly was from, it's the same exact thing. So monthly is going to give us the same exact thing. We're going to have 1361, same date time frame. We're going to have 169. We're going to have 1890. And back on the market, 223. Active under contract, 418. Pending, 201. Yeah, same exact thing. Let's take a look at withdrawn. I think withdrawn is going to start going up. Oh, wow. 260 withdrawn already, only 8 days into the month. 260 sellers have already quit. There you go. And let's take a look at the year over year. Well, we don't have to look at year over year. It's only 8 days into the month. Melanie said, people are on vacation right now. Well, which is why on the monthly side, we tend to have cooler April and May. Or actually, this is comparing. Let me just change this a little bit. And let me do this. Yeah, June. Okay, so we're good on that. We tend to have low Mays, even though May of this year picked back up. So it looks like our season was shorter this year, which is something that we did mention. Hey, we're going to have a very short selling season this year. And it looks like that's exactly what happened. Because April of last year, we had a 6.5 and then a slow down May, picked back up in June. And this time around, we hit a high of 8.0 February. We hit another, not another high, but it bounced up from 7.3 to 7.4 in May. And let's take a look at May to see if we have to update any pending. So we do, 1957. That stays at 7.4. Let's see if we have to update active under contract. That stays the same. So we had a little bit of a bump from 7.3 to 7.4. And then as of now, really early into the month, but you have to look at the data and we have to trust the data no matter what. You cannot be led by intuition. You have to be led by raw data. And we are noticing what? Jump on price decreases, which means that's a leading indicator. When those listing agents are not seeing any demand for their product, they're pushing price increases. That number bumps up to 92%. On a monthly basis, that's the highest one going all the way back to October at 92%. And 8 days, even though it's the first 8 days of the month, it is June. It's not like we had a holiday or anything. That's a very low number for the first 8 days of the month. Extremely low number. So something to be on the lookout. So do you have a listing where all of a sudden showings stopped? where maybe you're not getting a showing, or you went from getting 2 to 3 showings a week to all of a sudden, like, I've gone a week or so without any showings. Well, here's the data proving it. This is where you're going to have this information to schedule that emergency meeting with your client saying, hey, things are slowing down here first week of June. Take a look at this data. We just saw a pretty significant drop within the buyer demand. Is it because people are on vacation? Is it because of geopolitical news? Is it because of interest rates that are still holding steady at 6.5%? We did have a little bit of an improvement, even though on Friday we crossed a repricing level, still elevated, up 1.2 basis points. So we're not noticing a correction from the yield going up on Friday. No pullback on that. Very important week when it comes to rates this week, mainly because we have tomorrow existing home sales. We've got employment change. We've got National Federation of Independent Business, Small Business Optimism. And then the big one is going to be on Wednesday, where we're going to have CPI, Consumer Price Index, which is inflation. So we've got a lot of readings coming out. Today is the least consequential date. The only good thing that happened this morning at 10 a.m., right when the meeting started, is the New York Fed one-year consumer inflation expectation. They published their number at 3.5%. The previous was 3.6. I don't think that's good at all. 3.5 is still terrible. Whatever happened to the target rate of 2%? All of a sudden they're like, oh, 3.5, better than 3.6. That's not bad. These people are thieves. So it's legal theft. That's what inflation is. We've got a 3-month and a 6-month bond auction today, and then that's it. Tomorrow, we've got some inflation data that's going to be mainly on import and exporting. Existing home sales, not inflationary at all, but Wednesday is going to be the really big day. Wednesday CPI, Thursday PPI, and then we've got Friday a lot of commodity data along with University of Michigan inflation expectation, consumer sentiment, current condition. So really big week for rates. Very, very big week for rates. But I would be lying to you if I told you that this 0.39 is not a concern and not consequential. We've been doing this a very long time. We've been tracking this data for an extremely long time. And let's take a look at this right here. And you can see that for the month of June, we're starting off June at a 0.39. That's a very, very low number. And we've been on a tear. We've been doing really, really well. We beat out, so far this entire year, we outperformed last year from January. We've been on a really good tear. So this 0.39 is very surprising. And we will keep on updating this information. I would say this, take a look at the update that we are going to publish tomorrow morning. Okay, there's a Supra national outage. Maybe that's why. Maybe that is what's going on. Well, but that only started, this morning? Let's take a look at it. Supra national outage. Unlock MLS. Nationwide outage is affecting. This is the second time that this is happening. Let's take a look at it. It's supposed to be on the front page of our board. Let's take a look at it. Supra outage nationwide. Oh, this was 2 months ago. Did it happen again today? Did a Supra outage happen? Pop came up on MLS. Pop-up came up on the MLS. Let's see if I can. Okay, let's take a look at it here. There we have it. We have been notified of a national outage affecting Supra services. Supra is aware of the issue, actively working to restore. At this time, there's no estimate time for resolution. We will continue to monitor the situation. Y'all, listing agents, this is my warning and advice to you. Always have a combo box at the property. Put in the gas meter. Put it somewhere. Back patio, fence, don't care where it is. Every single one of your listings ought to have a combo box so that they can get access to the property. I put my property, last time this happened was 2-3 months ago, and my listing on 78745, we had a combo lockbox, and the agent called me like, hey, I can't get the lockbox to work. And I said, hey, yeah, there's a Supra outage. By the way, there's a combo lockbox on the gas meter. Here's the code. They were able to see the property, and I recommend stay away from the gas meter. That's pretty much the only place I put it is the gas meter, right where you're supposed to lock it. So you can put it anywhere you want. I like the gas meter, Oliver. I don't know why you recommend to stay away from the gas meter. You can find it easily. Probably safety. So maybe the electrical panel. What do you think? So, or connect the two. Put both of them together, connecting with a wire, copper preference. No, don't do that. I'm joking around. Anywhere you feel safe, I'll say that much. And they show the property and we put the property under contract, right? So have a combo box on every single one of your listings. So thank you for letting me know, Oliver, this nationwide Supra outage. Y'all, this is like the second time in 2 months. Some of the old timers here, where you've been in business for 10, 15, in my case, 22 years. I don't ever remember there being a Supra outage up until these past two. Do you all remember any Supra outage in the past? I don't remember there ever being a Supra outage, like not one time. I always have combo boxes for emergency. Love it, Melanie said. Oliver said, I agree. Don't ever remember all of a sudden we get 2 in a row. So something's going on. Something's going on. Let's take a look at the economic calendar, even though I told you all the information. I think it's still good to take a look at the economic calendar. You can see here that today we've got the consumer expectation. Let's see if they did the bond auction, what it came out to. Did they do? Okay, no report yet on the bond auction. Let's click on this week. And you can see we've got small business optimism. Interesting to see what that's going to come out. We've got ADP employment change. We've got import export, existing home sales. Big one, Wednesday. 07:30 a.m. Wednesday. CPI. I will send you all an email when this comes out. CPI Wednesday. PPI. CPI is going to be the consumer side of inflation. PPI is going to be the producer side, the input side of inflation, more of a leading indicator as opposed to a lagging indicator, which is CPI. Then on Friday, we've got consumer expectation and a lot of commodity data. So really big week for the bond market, something we really have to be on the lookout. But as of this morning, if you are a Team Price member and you go to resources.teamprice.com, only Team Price members have access to this. You can see that the conventional 30-year from Mr. Robert, the faithful, 6.5%. Really decent 15-year. And look at FHA. FHA has the same rate as 15 years, 6 1/8, which is really amazing. VA 6 1/4, USDA 6 1/8. Jumbo, not a bad rate for jumbo at all, 6.625. And I wouldn't even say it's bad for investor. Usually investor can be up to a point higher than conventional 30-year, but in this case, only half a point higher. So overall, still pretty decent rates that we're seeing, even though the 10-year Treasury right now at 4.556, up 2.4 basis points. So the sucker is hitting a high over the past few weeks. Let's take a look at your Austin daily briefing because we do have some encouraging data that we will report on the Austin daily briefing. On the number of active listings, we're at 17,167, 40 or 50, 51.4% of those have had at least one price drop since it was on the market. We are down on the number of active listings, 2.13%. So that number is just squeezing a little bit. We hit 4% not too long ago. Now we're down only by 2.13%. On the pending side of things, we are up 7.4%, which is super encouraging. 4,664 was this same day last year. Today, 5,009. So we went back over the 5,000. That's a 7.4% increase year over year on pending. Super encouraging. Activity index, one little bit of a reversal that we have to be aware of. Overall, the activity index is 22.6%. That is up 7.5%, but take a look at resale. Resale is now down under 20%. 20% is the danger mark. Resale has been over 20% for quite a few months. Resale is now under 20% at 19.82%. We have one city over 30% activity index, and that's going to be Driftwood. That's going to be the best city that we track. On the zip code side of things, 492250, doing very, very well, all over 35%. And let's take a look at months of inventory. Let's look at months of inventory right here. Months of inventory right now, 5.98. That's going to be a drop of 4.3% year over year. And we have 11 of the 30 cities that we track inventory is higher, but 19, 63% of the 30 cities that we track, inventory is lower right now than this same exact month last year, which is crazy. It's going to start off with Pflugerville inventory, months of inventory down 1.3%. Bastrop 1.6, San Marcos 1.9, Elgin 5.8, all the way down to Manchac down 41.1% year over year. Look at Leander down 22.9%, which is crazy. Lakeway 22.6. City of Austin inventory is down by almost a quarter. Now that's meaningful right now, right there. That is meaningful data. When you look at inventory right now today compared to the same exact month 2 years ago, 22 out of the 30 are higher and 8 out of the 30 actually have lower inventory. We are expecting just shy of 3,000 properties closing this year. When you adjust the number of closed properties cumulative from January all the way to June, we are 18.3% below average. We did beat out last year at 582, but not by much, only by 1.9%. This is going to be the cumulative sold. When you adjust that for the number of realtors and you look at the apples to apples comparison based on the exact number of realtors going all the way back to the year 2000, we are up 9.4% year over year, which is very encouraging. Of course, only 8 days into the month, we do expect pricing to be higher for the first 8 days of the month because less property or more expensive properties close in the first 2 weeks of the month compared to the last 2 weeks of the month. So pricing is up 6% year over year. That number is going to go down as we close out the month. On the median side, last month, pricing actually went down by 1.8%. It is currently up by 2.8%. And you can see that on the average sold price, we are down 9.2% since the market peaked May 2022. On the median side, we're down by 16.82%, which means that if today is the bottom of the market, it will take roughly 49 months, June 2030, for the market to return back to its peak value. When you look at every single property that has closed, this is an exciting little update. On the average sold price, we are actually up. We're up by 0.1%. You look at all 13,307 properties that have closed so far this entire year, we are up $459 on the average sold price year over year compared to every single property that closed last year, which was 30,695. On the median side, though, we are down. We're down 1.5%. If we finish the year down, it's going to be the first time in Austin history where prices actually went down 4 years in a row on the median sold price. But thankfully, that is actually the rate of decrease has slowed down. And when you look at the sold to list price ratio, we've got an improvement, 97.3 compared to 97.1. Let's take a look at the top 25th and the bottom 25th percentile. We can see that the bottom 25th percentile is exactly the same. The bottom 25th percentile of properties selling over the past 30 days compared to the same period compared to 1 year ago. The same 30-day period compared to 1 year ago is flat at 325. When you look at the top 25th percentile, that is up 2.6%. And out of all the 30 cities that we track, 7 are up in value and 22 are down in value when you look at the median sold price compared to last year. How many sellers are there per buyers across the entire market? We're looking at 2.6 sellers per buyer. This is going to give you a really nice little snapshot of which cities are hot, warm, balanced, and cool, along with cold. 0 hot, 1 cold. On the zip code side of things, we've got 4 zip codes that are hot. We've got 37 hot, 39 hot zip code, 49 and 50. Those are going to be your 4 zip codes that are hot. We've got 26 warm, 35%, 27 balanced, 36%, 15 cool, and then 3 that are cold. 2-1 is going to be cold. What else is going to be cold? We've got, what else is cold? We've got 78612 is cold, and then we've got other ones that are cold, but I can't see them now on the list. So we've got 3 that are cold. Maybe I already picked out the 3, but 3 are cold, and then 15 are considered cool. When you look at the absorption rate, sold divided by active, thankfully, we've got an increase. We've got 20.8% for the month of May compared to 19.6% May of last year. Keep in mind that we will only update June in the last 5 days. The last 5 days. Let me drink some water. Then I have to drink some coffee to keep myself nice and hydrated. And let's take a look at the market flow score. That's going to be 5.42. This is going to give you your how's the market from 0 to 10. And we are looking at 4 months in a row where the market flow score has outperformed last year, which is exactly what we want to see. That gives us an indication that the market is now in recovery mode. So even though the new listen to pending ratio did drop by way more than we were expecting here in the first 8 days of the month, the market is still considered in recovery mode. Of course, could this be a fake bounce? It could. I certainly don't feel like it is. I hope it's not. But that ratio is definitely something that we have to keep a very close eye on to see if this sudden drop is actually sustained or not. It is 10:42, you all. Any questions, any additional information that you would like me to go over? Any questions, comments, concerns, criticisms, or complaints? Any questions?
Dan, how's it going?
Doing very well, Mr. Daniel. How are you doing, and how can I help you?
Excellent. Unrelated to any of this, on a new lease contract, do I have to list the kids and the date of birth, or only the adults over the age of 18?
No, you're going to be listing them as occupants.
Okay.
Yes.
Cool.
Yeah, good question.
Thank you.
Absolutely. So, double dip, have not found bottom. New bottom awaits. Too early to tell. This new listen to pending ratio starting us off at 39. It's definitely a warning signal. But over the past 14 weeks, we've been on a tear. We've been on a situation where out of 10 data points, all 10 of them were moving in a positive direction. And then all of a sudden, we just have one data point that's saying, oh, okay, what's going on here? We've got a really low absorption first week of June. Could it be a false signal to where all of a sudden the number of pending goes from 201 because it was such a nice weekend outside and people are traveling, whatever the case might be? All of a sudden this number doubles overnight and it's like, okay, fine. We actually beat out last year. That could happen. I mean, the reason why we update this on a daily basis so we can be at the forefront of any signals that will change. So right now, the way that I would classify this 0.39 is this is simply like the warning, like, okay, well, what's going on here? This is a pretty significant drop in demand, in absorption on the first week of June. I mean, no doubt it is a big drop that we have to be aware of. We've got a higher than expected number of price drops. And if you start getting more price drops, why is that listing dropping the price? Because they're not getting any showings. So for the first time now in 14 weeks, we had a little bit of it 2 weeks ago where the ratio is lower compared to the same week last year. So this was a little bit of a warning there, but we need an additional 59 properties going pending to then be positive. There's a 75% chance that that's going to happen, but so far we're down 44.3%. Chances of this going positive compared to last year, slim to none. And we've got what's going to happen 2 weeks in a row where we're going to have more new listings entering the market, and then we have less properties that are going pending. So as of now, this is definitely be on the lookout. If you have that listing, it's not moving, you're not getting offers, you're not getting showings, you've got to look at the pricing, right? Because the market can change, just like that. And it can slow down enough to where all of a sudden you're not getting listings. And your client hires us to sell the property. And when we see the data slow down, all of a sudden, certainly something that we have to be on the lookout for. Good question. Very good question. Any other questions, you all? Any other questions, comments, concerns, criticisms, or complaints?